Finally, SMCI has submitted their filings for the last quarters and their 10Ks. If you check on SEC, you can see the latest filings: 10K, 10Q, and 10Q. The deadline was on February 25th, and they succeeded to upload those filings. So the risk is gone. The risk of delisting and other risk related to fraud, they are gone. And as you can see, pre-market, the stock price is expected to go up 22%, back to $55. As I said in my previous video, this wasn't a major risk. They can get over, and they did. Now, the next question you should ask yourself is about their filings. If they are reliable, if you can trust them, if there are some mistakes, and then to assess if this company is still a buy at the current level. Market cap around 26 billion. Now, with the upside of 22%, the market cap might be around 30 billion. So let's check their filings. First, you can look at their latest filing, latest quarter, and they reported their assets. Here you can see that they have in cash 1.4 billion. As they said in their press release, their latest press release, here you can see that they report that the total cash and cash equivalents were around 1.4 billion. So they told the truth back then. And also the revenue said that was around 5.6 billion. And if you check the report, the revenue, you can see that is around 5.6 billion. So for the moment, you can trust their filings. They also changed their CFO, implemented better measures, so that they can be sure they can track all their costs and numbers. Now, as I said in my previous video, this is not a risk, their filings. Even if they found some fraud, some mistakes in the reports, that is not a risk in the long term, only in the short term. You will see a decline in the stock price like this, and then a rebound. The question you should ask is their profits and their future growth of revenue. If they can grow further, and if you can take advantage of the stock price and calculate the future value of this company. So if you look at the latest report, you can see that for the last 6 months, they made about 11 billion in revenue. So per year, they might make more than 20 billion. If you look at the guidance here for full year 2025, of course, they reduced their guidance, and that's another reason why the stock price has declined. And the new range is between 23 and 25 billion dollars. So they are in line to deliver those numbers. 23 billion in revenue or 25 for the next 12 months. They are in line. And then you have to look at their earnings. As you can see, for the last 6 months, they succeeded to make 744 million in earnings. So their margins aren't that high, but they're able to make some profits. And this is important. If they continue to maintain these margins around 7-8%, then the current market cap from this level can double. And if you look here at their guidance, they also provide the guidance for the full year 2026. The revenue is expected to be around 40 billion. What does it mean? Well, if the revenue reaches 40 billion from this level, this means a double, a growth rate of 100%, close to 100%. You might see 80% or 90%, something like that. But their growth rate will be amazing for the next year, 2026. And if they can maintain their margins to double their net income from 700 million to 1.5 billion, then the market cap can double. And of course, they also have to maintain their growth rate. So the stock price can go back to $90. Highest peak, as you can see here, $114. But the stock price can go to $90 as long as they keep growing, increase their revenue, double their revenue, and also their profits. It's not enough to see an increase in their revenue. You also have to see an increase in their profits. So if you look at the last quarter compared to last year, you see an increase from 450 million to 744 million. And that's a huge growth rate for this company. They took advantage of this trend, tailwinds from AI, and they're able to increase their revenue and earnings. Now, going forward, I believe that the revenue will increase even more from 20 billion, close to 40 billion. There are high chances because there are a lot of investments in AI. You've seen new projects, new capital expenditure from the big players. For instance, Microsoft is expected to spend over 60 billion in R&D related to AI. Amazon, Google, Meta also want to invest more than 60 billion in AI. Plus, there is also a big push from the government. That big project, Stargate, which is expected to invest around 500 billion in AI. And SMCI, as they are building those servers, the infrastructure for AI, they can take advantage. And especially they are an American company, they are from the US, they can take advantage. California, as you can see here, headquarters. So I'm sure that the revenue can double from this level to reach 40 billion in revenue. Maybe not 40 billion, maybe 45, maybe more or less, 48 or 45. But the revenue for sure will increase. What matters, as I said, is their margins, to maintain their margins, to see an increase in their net income as well. Now, there is also another risk because as they make more money, they also want to take advantage of the high stock prices and raise more money. As you can see, the number of shares, if you check the last quarter results, has increased from 546 million to 591 million. This is for basic. Diluted, over 647 million. And this is a problem because if they keep issuing more shares, you can see here their past shares outstanding. If they keep increasing this number, you'll face the risk of dilution. Your value decreases over time the more shares they issue. So be aware of this. Over the last 15 years, the number has doubled. So be aware of this risk. And second, if you look at their stock-based compensation, you can see a huge increase, 40% from 100 million to over 146 million. Of course, also the revenue has doubled and they want more money, more bonuses. But be aware of the most important indicator, their final earnings. If they can maintain their margins and revenue, for sure, I think that revenue will increase to 40 billion. They will reach that level and you will do quite well. You can have a double from this level, the market cap to reach 50 billion. 50 billion. If you are pleased with that return, then you can take advantage. If you want more, then you have to find better investment opportunities. So that's it for this video. And if you have other questions, please let me know in the comments.